if you look at the earnings expectations,
Yeah.
Mag 7 earnings expectations, the growth rates are still pretty high, but they're expected to slow.
Yeah.
The thing that is driving the overall market earnings expectations surging is expectations of the rest of the 493 surging from, low single digit type earnings growth to 15% by the end of the year.
Yeah.
That's where the gap doesn't make a lot of sense. Like, look, betting on how much disappointment would have to happen for NVIDIA not to, deliver earnings in the ballpark of what's expected, right?
Yeah.
The rest of the market delivering earnings that are going to accelerate from low single digits to mid double digits. That's a real question. Like, tell me the story about how that's going to happen with a stronger dollar.
AI.
But yeah, right, exactly. But where are those companies actually delivering increased earnings using AI?
Where is the source of that?
What's the source of it? I understand people are buying chips.
Falling dollar.
The dollar's up.
I know, but falling dollar could be the source of that if it actually falls.
But I mean, that's like,
no, I understand.
It's tech spending.
Right. So that's the question. But
no, the ROI from last year's tech spend.
The people who gain in the tech spending are the people delivering the tech infrastructure.
Mm-hmm.
No.
Right.
The ROI from the tech spend of last year. Like, hey, we bought all this shit from Oracle and Amazon, and look, earnings surprise, because it turns out we were able to not have to hire the next 2,000 people. And instead, we're getting by with more tools and we're making more money.
Right. And that's the hope in the market.
That's the hope.
And there's one set of if you talk about the let's say the AI focused tech, whether they'll get the sales and the profits is pretty clear. Right. People are investing in AI.
Yeah. Well, where are the customers' yachts is the question.
Right.
Yeah. Well,
right.
All right. So hypothetically, you got 10 gigantic drug makers all selling at 10 PE multiples right now, effectively getting no credit for anything they're doing, sat out the bull market last year, sat out most of the bull market 23 as well. Okay? What happens when one of them comes along and says our drug discovery costs are actually trending lower because we're replacing people in lab coats with AI?
But those they don't discover any drugs.
They make acquisitions of companies.
Venture-backed small businesses discover drugs. That AI benefit, I do
it's
some
an
work.
R&D. It's
I
an
do some
R&D
work in this
expense
space.
that's a benefit.
And the people who are benefiting from that are the small scale companies that are using AI to do drug discovery.
So that'll show up in the smaller ones before the larger ones.
Absolutely.
Okay.
Yeah, they're benefiting from it. There's been a stepwise change in that over the course of the last even couple of years, but
right.
The big companies, they're paying top dollar for those products, not the other way around. They're marketing companies.
I think people are bullish just on the idea that there will be continued margin expansion at the 493.
Well, there better be.
Right. And that's what it comes down to. Is there margin expansion of the 493 in an environment of relatively tight labor markets? Not super tight, but tight labor markets. And if there is margin expansion, who's paying for it? Right? Because the flip side of margin expansion is
less hiring,
less labor. And so this is the macro. The AI story cannot be divorced from the macroeconomic dynamics. And those are, if you have margin expansion, which is effectively priced into elevated expectations, then it has to be paid for by somebody else. So either the government has to expand its deficit, or households have to massively save considerably.
What about